Welcome to the Path Forward series. Raffi came up with that name, and I thought it really made sense for what we're trying to accomplish. I'm Teresa Fuller, and since January 7th, my experience has really been that the more we all get together, the more we share, the more everyone learns about how to push their own path forward in the recovery that they're trying to build for themselves. And the more we know, the better we are as a community. So thank you for coming. Because of what each of us do, we have spoken to hundreds and hundreds of survivors of the Eaton fire. And we've learned a lot. And I know that all of you have been doing your research and you know a lot. So I just want to get together as often as we can. I feel like it really enhances our community and brings better things for our wonderful Altadena. Again, I'm Teresa Fuller. I've been Altadena's most productive real estate agent along with my team agents for lots of years now.
And the unofficial mayor of Altadena.
I'm with Daniel Arias, who is everyone's favorite lender. He has a company called We Fund LA. And I think once the fires happened, that took on a really different meaning. And he has been absolutely passionate about helping people move forward. Raffi Kassabian is a mass tort attorney with so much experience in the Lahaina fire. And he has represented hundreds of families. He is so knowledgeable. Thank you, Raffi, for being here. And then we have Brandon Nuñez. Harach Garazian was not able to be here tonight. He's sick. So we got a worthy substitute, public adjuster and attorney. So I'm looking forward to hearing what he has to say. Our format is that we're each going to do a short presentation, 5 minutes, something like that. And then please hold your questions until the end. I'll just introduce myself a little bit more. I'm here at Compass. I have a fairly large team of agents. About 40% of our business year over year has been in Altadena. Hundreds and hundreds of our clients have lost their homes or have standing structures that they're not able to go back to. We've tried to be as knowledgeable as we can be since January 7th, and we just want to stay on that path. I'm going to just talk quickly about the state of the real estate market in Altadena and what has happened. For a moment, the market stood still, but by January 31st, 3 lots were listed, 1 standing structure was listed. The next week, 4 lots, 2 standing structures, then 7 and 7, then 21 and 7. And by the 28th of February, there were 37 listed lots and 9 standing structures. Very quickly, on the 14th of March, we had 58 lots listed and 15 standing structures listed. Last week, some things sold. So the lot inventory went down a little bit to 36, and the standing structure inventory actually went up. Standing homes, it's been interesting. 2 have closed. And it's sort of coincidental that our team has brought the buyers to both of those homes. There are active buyers wanting to purchase in Altadena. And both of those homes closed at prices that are very close to their pre-fire value. I wouldn't say that it's 100% of pre-fire, but very close. And I think that's interesting. Our lots are the average price per square foot of lots that have closed. It's about $66 a square foot. The closed lots that are under 10,000 square feet closed at about $76 a foot. And, larger lots are closing much lower at 55 a square foot. There's a lot of interesting information about what people are looking for in terms of lots. Lots of people are out there looking for lots that still have their pools and are only looking at lots with existing pools. Some people are looking for lots with the existing foundation and hope not to find a lot that has been completely scraped. Other people are looking for completely scraped lots. So it's an interesting world out there to see, who's looking, what they're looking for, and why they're looking, what their plans are. I think lots that are in neighborhoods that still have other standing structures, that still have their old growth trees, that, lots where people are able to see the vision of what they can bring are selling at much higher prices than lots that are surrounded by devastation and where all of sort of that natural landscaping, the beauty is gone. So it's going to be interesting to see as we move forward. I'm going to pass it to Daniel. You're next.
Okay. So as Teresa said, my name is Daniel Arias. I am a mortgage advisor that happens to actually be here on the third floor of this building. So it makes it convenient to come visit my friends here at Compass and with the Teresa Fuller team. I did want to just take a second and acknowledge the work that Teresa and her team have been doing for the community. Like, they've shown up in just such a powerful way, more than agents or more than realtors would normally do. And the work that they've done to just really help people rebuild and give people hope is remarkable. And so I just wanted to acknowledge that and thank you for everything that you've done for our community. I'm grateful to be here. I'm also a reserve deputy sheriff with the LA County Sheriff's Department, which was interesting because I got evacuated myself that night, but then also got called in to work the fires as a reserve deputy. And talking to my friend Teresa Fuller, whose home was impacted, and she's like, "Can you go feed my cat, please? Because I can't get in." And little what's Shadow Whiskey? Little Whiskey needs to eat. So we were able to go and make sure that little Whiskey had some food. But anyway, what I would like to do today is continue on that same theme of hope. And we've had the privilege of an honor of speaking to hundreds of families that thought that there was no hope. They thought that they were just going to have to see the painful and slow insurance process through. But after speaking with us, speaking with Teresa's team, they now have some hope, and now they have a path forward. And I actually would love to talk about our first transaction that we had. We had, I think she was like, I know what she was because she was our client, but she worked for SoCal Gas, very important person at SoCal Gas, lost her home in Altadena and bought a home in Altadena in 3 weeks. All in 3 weeks. Lost her home, bought her home in Altadena, both homes. And that to me was just kind of the first moment for me to be like, there's hope for people. And just hearing how happy she was. She's like, I have kids, I need stability, I need safety. That checks enough boxes, let's go. And after closing that first transaction, I think to me, there was like a shift in my mind as well. Like, we can do something. We can give people hope again and stability and safety. And so we've done that now multiple times over and over for people that were both impacted here locally and people that were impacted in the Palisades fire as well. And we've done that a couple of different ways. we actually launched a disaster relief mortgage program that exists, that's out there, that not very many people know about, but it became a really powerful tool for us to leverage and to talk about. Welcome, come on in. It became a really great tool to talk about and to share with our community. And so we'll go kind of through this really quick slideshow or a presentation about the program, and then we can open it up for some questions at the end. But if we can maybe start running through some of that, or who's the clicker? Do we have a clicker? Oh, hi, Corey. Thank you for clicking. The most interesting part, in my opinion, about this program is that it's actually available to both homeowners and renters who were impacted. So you could have been a renter, and your landlord's home could have been lost or impacted in the fire. And you as a renter can also qualify for this program, which really the big draw to this program is that it offers financing up to 100%. You don't need a down payment to purchase a new home if you were impacted by the fires. And so the other really great thing about this program is that you can take it anywhere. If you wanted to buy something here locally, great. If you thought that LA is not the place for you now, you can take it across state lines and pretty much use this program anywhere. The real qualifier is that you were impacted by one of the fires, either in the Palisades or in the Eaton Canyon fire. And you have up to 1 year to use this program from the FEMA declaration date, which is it was January 8th. So up to January 8th of 2026, you can use this program. And again, the real big draw is that there's no money down. Now, I'm not going to lie, it gave me a little bit of PTSD when I heard we were launching 100% financing, because we all kind of remember what happened last time the banks offered 100% financing. But it's very different this time. We're not just checking pulses and making sure you can fog a mirror. We're actually doing a full thorough analysis of income, credit, assets. It is a full document loan that you have to show and prove that you're able to qualify for the desired mortgage. And so this program is available to renters and homeowners. You can take it across state lines. The property, the qualifier for the property, we've had a lot of questions about, well, my house is still standing, but I can't, it's unlivable. Well, you would qualify if that property has sustained fire damage, smoke damage to the point of necessary reconstruction or replacement. That would be a qualifier for you, even if the home is technically still standing. Go to the next slide. There are some loan limits. So people have said, can I go buy a 4-unit property with this program? Can I go buy a $2 million property with this program? And unfortunately, there are some guardrails around how you use this program. It's really intended to assist that displaced family that's looking for some stability and looking for a place to live while they rebuild. And so you can use it up to $1,209,000 in LA County. And then we've included a few examples of the surrounding counties here in Southern California of what the maximum loan limit would be, and the maximum purchase price, since there is no down payment, so it's one and the same. I did include a couple of examples of what that would look like from a monthly payment perspective, because people have asked, well, what does it look like if I go buy a $600,000 condo or $1 million condo or $1.2 million single family with nothing down? And so we've included some examples of payment examples of what that would look like across those 3 different examples. A couple of things that I want to take a moment and share with you. So at first glance, you're like, oh my goodness, $1 million, $8,200. That's a big mortgage payment, right? Well, we are discovering after talking to a lot of our clients, and again, I guess this will be my disclaimer, make sure you speak to your own insurance company and adjuster and professional legal counsel to get your own advice. But we've discovered that a lot of insurance companies have taken the position that they are allowing loss of use coverage to be applied towards mortgage payments. And so we've spoken to clients who have, I think the smallest loss of use coverage that I've seen is $80,000 or $90,000, and I've spoken to one client who has $400,000 of just loss of use, right? I mean, people's insurance coverages are usually broken up into 3 buckets. They're rebuild and replacement cost coverage, their contents and their loss of use. And so some people have $200,000, $300,000, $400,000 of loss of use coverage, and they're applying it to their mortgage. So they are saying, why would I want to go rent and pay a landlord's mortgage and give him $8,000 or $9,000 or $10,000 or $12,000 a month? Because that's sadly where rentals prices have gone, when they can apply it towards an asset that they will own. And I'll never forget Rudy Manning, one of our clients, lost his home in Altadena. He's like, Daniel, so you're telling me I may end up with an investment property and a new rebuilt home in 2 or 3 years when I rebuild? And man, this is a great way to turn a negative into a positive. Those were his exact words. And so, we've had those stories. I'm sharing that with you because I think that does give people hope, and this could be a way to turn a negative into a positive. And so again, we encourage everybody to check with their specific insurance company to see what coverage limitations your policy has. And it may even take a little bit of, back and forth and pushing and getting a little creative. One client was told by her insurance company that they wouldn't allow loss of use to go towards new mortgage payments. But they did tell her, if you put it in an LLC and you're renting from this LLC, we'll pay the LLC. So it sounds like there's workarounds to make sure you're utilizing your loss of use coverage in the smartest way possible. So, yeah. Next slide. Insurance claim. Yeah. So I want to talk a little bit about, again, that this is a full documentation loan. We are making sure that you can qualify for the desired mortgage payment. One of the most recurring questions we've received is like, how am I going to qualify if I've got a mortgage on my home that was destroyed? Well, this program actually allows us to exclude your mortgage payment that you have on your current existing home. So if you had a $4,000, $5,000, $6,000 mortgage payment on your home that was impacted, that gets excluded from the qualifying ratio. So it makes it a lot easier for people to qualify. One other thing too about qualifications, the interest rate's actually discounted as well. It is a federally insured program for disaster victims, and the interest rate's about 0.5% lower than where conventional rates sit. So you get a little bit of a discount. Not a ton, but it's better than the conventional rates. Next slide. It is a 30-year fixed loan, so don't have to worry about it adjusting on you in the future. There's no prepayment penalty, so if and when rates come down, you could even refinance that thing into a lower mortgage. The minimum credit scores are pretty low on this thing, which is a little scary, but they will go as low as 580. Again, flexible debt to income ratio requirements. We will exclude that payment on the impacted property. And I think that's good. Next slide. One more, I think this is the last one. So here, a couple of frequently asked questions. What happens to your current mortgage? We've gotten that question a lot. Oh, we have a question. Yeah.
About the 0% down.
Yes.
If you want to get to this later,
That's okay after everyone's presented? Is
Okay.
that okay?
Don't forget your question though. Just make sure just lock it in there and write it down, and we'll get to it, I promise. I just did want to go over a few frequently asked questions. A lot of people have asked about forbearance and what would I recommend for you to do. So, everyone's situation is unique. I would say that you want to understand what the unintended consequences could be with forbearance. Forbearance is obviously a great tool for people during a time of hardship. We saw it during COVID, right? COVID, you called your servicing company and you just mentioned the word coronavirus or COVID, and you got automatic forbearance for up to 12 months. But it also meant that you were not able to refinance your mortgage and take advantage of those crazy low rates during COVID. So proceed with caution. If you want to talk about your situation on a one-on-one basis, I'm more than happy to, just so I can give you better guidance and counsel. But forbearance could be something that is perfect for you, or it could be something that you probably should stay away from. But I would say, again, just proceed with caution, really know the ins and outs and some of the unintended consequences that can come with forbearance. What if the property is listed above the county loan limit? So yeah, we had one person that said, "Oh, I like that house. It's $1,250,000, but this loan only goes up to $1,209,000." They have money, they can bridge the delta and bring in cash to close and use the program still and use the discounted rate. up to $1,209,000. We talked a little bit about the house loss of use coverage and how that can come into play. And mortgage forbearance, again, just be very careful with if and when you do decide to pull that trigger.
Thank you. Thank you very much. Teresa, thank you for putting this together. We really appreciate it. Teresa's also been impacted by the fires, but yet she has spent all this time meeting with everybody in the community to help them. So thank you. God bless you for that. And Daniel and Brandon, thank you for participating in this very instructive content rich panel. I'm Raffi Kassabian. I know people were probably tired of lawyers before the fires. I can't imagine how tired you guys are of lawyers now. But bear with me. I want to give you some useful information. Let me briefly tell you about myself and my team. Raffi Kassabian with Bezdik Kassab Law Group. My office is right down the street on Colorado and Oak Knoll. I've been a Pasadena resident for nearly 30 years. I live in Upper Hastings Ranch, so my family and I have been impacted by the fires. We've been displaced. I've been commuting every day to Pasadena, so I'm in it with all of you. I know people have suffered in different degrees, and I'm here to say, we're with you. This is a team effort, and the people are resilient. The people of Pasadena, Altadena, we are resilient, and we will be getting through this. Before launching my firm in 2020, for 9 years, I was with one of the largest law firms, Reed Smith, in downtown Los Angeles, representing some of the largest financial institutions, Fortune 100 companies on the defense side. So now, being on, with my team on my own, it's a privilege for us to be representing homeowners, renters, business owners in the Edison mass tort lawsuit. I'm licensed both in California and Hawaii. We have an office in Honolulu, in Oahu. And so we currently represent hundreds of fire victims in the Lahaina Maui litigation against the utility company, which recently settled for $4,200,000,000. And that case is now in the claims process. And similar claims of negligence against the utility company, which are the theories that are being pled here against Edison. We did the Maui litigation with lots of lawyers, and that settled for over $4 billion. So now that's in the claims process. Similar negligence theory against the utility company. So I'm very proud to be a part of that effort. And I'll tell you personally, this last year, I spent maybe every month, every other week in Maui, from Pasadena to Maui, And sure, it sounds exciting. You're in Hawaii, but I'll tell you, on the ground, it was seeing the conditions that people were living in, the disaster, going to FEMA clinics, Red Cross clinics with my clients, going to the convention center to meet with the Army cleanup, debris removal cleanup team, seeing that and now reliving that in my own neighborhood. I'll tell you, it's very disturbing to see that happen all over again in your own neighborhood. And so to me, it's very personal. I'm very personally vested in this, and I want to make sure that we can get the best result possible for our community. It's going to be hard work, but it's going to take a team effort, and I think hopefully we can get that done. Now, for the community, lots of people are thinking, why do I need to participate in a lawsuit? I've never been in litigation. I'm not litigious. I have two concerns right now. I need to get a house. I need to have a roof over my head, and I need to get my insurance proceeds lined up. That's most people's priorities right now. Why does this lawsuit matter? This lawsuit matters for several reasons, okay? So this is my team, by the way. We've got our whole team here. Let's look to the next slide. Okay. What are we doing here, and why is this important for you as a fire victim? So we are participating in what's called a mass tort lawsuit. I have had lots of people tell me, oh, this is a class action. My office, many other attorneys are not participating in a class action. A class action is where, sometimes you get mail from Verizon or Visa giving you like $100 rebate card, right? In those types of cases, and I'm very simplifying this, but in those cases, everybody suffered the same damage, right? Everybody overpaid by, let's say, 10%. So the damages across the board are the same. Here in the mass tort, it's different. We are going after damages for each family member, each household. You may have lost your home, but your neighbor may have lost his roof. Your emotional distress may have been more severe than the person next to you. So everybody's damages is going to be evaluated differently. That's why it's a mass tort lawsuit. Yes, the cases are going to get consolidated in front of one judge in the complex court in downtown, but everyone's case will be dealt with individually. Okay, now obviously first we have to show that either Edison is liable and or settle the case. Majority of cases in California settle, right? Because no one wants to roll the dice in front of a jury, because the only guarantee in a trial is there's only one winner, one loser, right? Otherwise, nobody can promise you or guarantee you the outcome, no matter how good your case is. Attorneys don't have crystal balls, okay? So that's why cases oftentimes settle. So in this mass tort lawsuit, the theory, in essence, is that Edison's negligence caused these fires. And so we are going after Edison for damages suffered by the people. There's lots of misconceptions that I want to clarify. If we can move to the next slide, please. Okay. Lots of folks have told me, I have insurance, I'm good, I don't need to participate. That's not necessarily true. Lots of people either don't have insurance or they're underinsured. And if you're going to be forced to pay out of pocket to rebuild your home or your contents coverage, we're going to go after that delta, that difference in whatever that you're forced to pay out of pocket in the mass tort lawsuit. The emotional distress, everybody to some degree has suffered some emotional distress, depression, anxiety, loss of appetite, lack of sleep, etc. We're going to go after that in the lawsuit. Your insurance policy doesn't capture that. The forced displacement, the fact that like myself or others have been forced to pick up their lives, move somewhere else, drive additional couple of miles, etc. This forced displacement, there's going to be value to that potentially. We want to go after that. If there's any potential depreciation of value of the properties, I think it's too early to tell. We want to go after that as well. So there's buckets of damages that your insurance policy doesn't cover that we want to go after in the lawsuit. So that's one misconception. I'm a renter. I don't qualify to participate in the lawsuit. That's not true. Whether you're a homeowner or a renter, you have rights, right? If you've lost your home, you know, of course, as a renter, you're going to not be able to claim the dwelling if you don't own it, but you have lost contents, you've still suffered emotional distress. All of these things are damages that you can seek in the lawsuit. My home did not burn. I just got smoke and ash damage or, you know, partial damage. I can't qualify for the lawsuit. Again, that's not true. My firm, for example, is looking at it in all directions. You know, was there a mandatory evacuation? If you had some smoke, ash damage, so, you know, it's not as black and white as my home burned down or it didn't burn down and I can't participate. So we're looking at everything, okay? So that's another misconception. I'm not an Edison customer. I can't participate in a lawsuit. That's irrelevant, okay? Whether or not you pay your utility bill to Edison, that's irrelevant for purposes of whether you have standing to bring this lawsuit. The theory again is that the negligence by Edison caused the fire. So if you've been harmed, you should consider participating in the lawsuit. That's sort of the nutshell of it. These things, you know, it's hard to tell how long they take. It does take time. The Lahaina Maui case settled in 11 months, but that's really an anomaly. These cases take longer than that. It's been 11 months, but mind you, we're just starting the claims process. And in August, it'll be 2 years since those fires hit. So you're kind of in this for the long haul, but it's really the attorneys that are going to be carrying the burden on a lot of things. You're kind of going to be moving on with your life, and we're going to keep you updated and ask you for information, things like that. But we're the ones, you know, the attorneys are going to be moving the ship forward. So, you know, I think that's something to consider. And look, I'm sure you guys have been hit up by so many attorneys, mass mailers, ads. It's overwhelming, and it's hard to say, you know, who do you pick? And look, lots of them are great attorneys. They're good attorneys. For us, we take great pride that we're local. I think we're one of the few local law firms. We're in Pasadena. I've been a resident here for nearly 30 years. We have the experience. So for us, this is our community. Lots of our clients are existing clients that we've had. They're neighbors, they're community members. And that's how we, you know, the word of mouth is spreading for our firm, because once the dust settles, we're still going to be here. This is our community. So thank you for your time. I'll be here for any questions you may have. Thank you.
Thanks, Rob.
Yeah. My name is Brandon Nuñez. I'm General Counsel for Allied Public Adjusters. I might have to speak a little louder than too loud. You want to sit here?
Stand up.
You
You gotta
want?
keep my Zoom Nation happy.
All right.
Sorry.
Well, I was just going to explain that our CEO came down sick suddenly, so this was kind of a surprise for me. So I prepared some notes. I hope you'll bear with me. It's not my normal practice to stand up here and read notes, but bear with me. And you can give me energy too. So I'm a lawyer. Oh, got that. Good. All right. So I'm a lawyer. I'm also a licensed public adjuster. APA is a public adjusting firm. Obviously, we're not a law firm. So if you're here, I'm sure by now you've probably heard about public adjusters. Have heard probably a lot about public adjusters, especially recently. We handle property insurance claims on behalf of policyholders. So we're opposite your carrier. We are advocates for you, and we help you navigate your insurance claims. So our firm was founded in 1997. Over those 30 years or so, I personally think that we've grown to be the best in the business. But we also have a bit of a different business model from other public adjusters. We don't solicit as many firms do. We're a referral-based business. We handle a lot of complex, disputed and denied claims. We have in-house attorneys, of which I'm one, a very team of experienced and qualified claim professionals. Certainly, we'd love a call for any claim, anyone that has questions or needs help. But we tend to focus on claims where we feel that representation is most critical. Primarily, myself, I focus on coverage issues, advocacy, dispute resolution. Like I said, we do have in-house attorneys. That's my side of things. But as I mentioned, we also have at the company a fair amount of people with technical experience, building construction, estimating, allows us to effectively handle a wider range of claims. We've had a lot of success and growth over the years. I can personally attest. When I started, it was one small office. We've expanded quite a bit. I encourage you to view our website, which should be on screen, maybe. I think we'll just put that up, the contact information. Look at our testimonials. But what I hope comes across is that there's a desire and a drive to help people in need. I know many of you in here are in that category. And I am sincerely sorry for what you guys are going through. It's something else. I've never seen anything like this. And when we do field calls from people all day long that are going through a heavy experience. So we do try to be there for the community. We provide a lot of pro bono assistance to the public. We've always offered a free consultation for anyone who has insurance questions. And we've been able to keep that up over the years, which I am very proud of. Recently, and this is public knowledge, so I can talk about it, we took on a school that completely burned down in the Altadena area, pro bono. It's the Sahag Mesro Christian School in Altadena. And we were able to get them a fairly large settlement within, I believe, 2 weeks. So we're very proud of that. I believe it was around $7 million in undisputed payments. So we actually reached out to the CEO of the insurance company and involved him directly. And afterwards, they told us, well, we'd never seen anyone do anything like that before. They got a kick out of it, but it was a good result. And I think that's the firm we aspire to be. And I think that's a good idea of who we are, what we do. In terms of I looked at the agenda and I tried to prepare a few remarks about handling insurance claims. One of the notes was preparedness. I think that's a great topic, but I'll be brief because I think most listening into this are probably already dealing with a claim. But if you have a good policy with adequate limits, you go into a claim about as prepared as you can be. So I know this is not necessarily something that will help everyone at this point, but if your policy is not in place or your limits are low, you have fewer options. Fortunately, there are people out there like Raffi who are an option if you're underinsured. But one thing I do recommend is meeting with an insurance broker periodically and just making sure that you're adequately covered. And it's one of those things that, frankly, I think they should teach insurance in high school. It's one of those things that's everywhere. It's ubiquitous. It's at the heart of how the economy works, and yet people don't know it. Sophisticated people don't know it. So I'd say add it to the calendar once a year to look at it. As for claims handling, the best advice I can give is to consult with an experienced claim professional. As a caveat, I will say that you need to do some research. Unfortunately, you want to know who you're speaking to. You want to know there's someone with experience. There are dishonest and inexperienced professionals out there. But with that said, I don't recommend you go on your own. I will note that although I'm telling you don't go on your own, when we field these calls and these questions, like many of our policyholders, we tell them, you don't necessarily need a PA at the moment. You don't necessarily need a representative. We often counsel people, give the insurance company the opportunity to do the right thing and then reevaluate. And each case is different, but I recommend talking to someone who's licensed and vetted. The worst thing you leave with is some information most of the time. And you know, if you do need someone, they're there as a resource, licensed by the state. If you are dealing with an insurance claim on your own, I do have general principles. I don't mind noting them. I think every claim is case by case. So, you know, I'm not sure to what degree this is helpful, and you're going to find it frustratingly general, I think. But documentation to me is the key. Even now at this stage, you know, 3 months into it, keep a claim journal, keep a claim diary, support your claim with evidence. We all have cell phones that take beautiful photos and video, document the loss. You know, what that is specifically depends on the details of your claim. But a good PA does this, a good advocate does this, a good lawyer does this. It's all about documenting your claim and preserving your evidence. And be aware that you are being documented as well. Carrier adjusters are required to document their file by law. And so what you tell them is on the record, which is why the piece of advice I always give, even though it's self-explanatory and borderline offensive, is always tell the truth. It's simple, but very important piece of advice. You want to be clear and accurate when you're dealing with your insurance company, which is hard because it's a tough thing to go through, something like this. But you know, you don't want to be in a position where you've confused or misled your insurance company. And obviously, you know, if you do it on purpose, it could land you in jail, which is not something anyone wants. Don't delay. You guys have seen a lot. Just the other day, Judy Chu, Congresswoman in the area, released a bulletin of all the deadlines associated with FEMA, SBA. Your policy has deadlines. There's statute of limitations. You have less of a concern with a state of emergency claim like these fires, but you do want to be aware that there are limitations, time limitations to be aware of, so you don't want to delay. And advice I give to professionals and policyholders alike is read. Become a student of your file and read your policy. If you have questions about standards of insurance, the DOI has great resources. They do a once a year lawn review that they post. That if you've had a loss, I literally have it just here. It's just something that you should have with you all the time. But of course, like I said, that you're not going to become a claims expert overnight. And that's why I think that on balance, my advice is to talk to somebody. Like I said, a vetted, experienced professional, at the very least, you'll leave with some free information. And with that, I'll stop. It's good to be here, and sincerely, it's good to be here, and I'd love to talk to anyone who has questions or wants to meet.
Now we can have questions, Q&A for any and all of us, and we have our first question right there.
Yes, the disaster loan. So the 0% down. So obviously you have the PMI. If you have 10% down, can we then get rid of the PMI once you reach 20%?
Let's restate the question for Zoom.
The question is, since there's less than 20% down, it triggers PMI, private mortgage insurance. It's that little tax that you'll see on your mortgage statement. So you're not doing 20% down. The question is, can it be removed once you hit the 20% equity position? The answer is no. This specific loan will keep the PMI on there regardless of your loan to value. However, you can refinance. If you do get into a 20% equity position, it's probably going to make sense to refinance anyway. Maybe even get a lower rate because now you have 20% equity. So you would just get out of the disaster relief loan into a conventional loan, drop the PMI, and save those few $100s a month. So yeah, good question.
How about a question from Zoom? One of our attendees, she got a very low estimate for her home rebuild. And her insurer only gave her $6,000 of her $230,000 in her policy. She's wondering what her next step should be. They say that the check is final, but she said she's not going to cash it, and the insurance commissioner agrees. So what does she do to go get all of her money?
Yeah, the question was about a very low payout and some cryptic comments about what it means. Frankly, I think we would need more information to give any sort of advice. This is unfortunately a very common thing you hear about all the time. I think she needs to talk to someone who knows what they're looking at. For a first party claim, I'll say generally, if an undisputed, we call payments that are issued along the way, undisputed payments. In the third party environment, I won't go too deep into that. Typically, insurance carriers are looking to pay a certain amount and receive a release in return. In a first party claim, there's a duty of good faith. They have to adjust your claim. The insurance code provides a standard for that. Essentially, it's pre-loss condition, and they have to pay that. So if they issue some sort of partial payments, then you're good to take that to the bank and cash it. That's not any sort of agreement as to $6,000 being the accurate value. So that's something to keep in mind. That said, with so little information, I'd probably not do anything and take it to some claim advocate who can look at it and provide a free consultation and give some context. That sounds outrageous. I mean, I would be beside myself if that's
And when you say
communication.
claim advocate, that's a public adjuster.
Public adjuster, yeah, personally, I'd love if they call allied public adjusters, but there's great professionals all over. There's lawyers, there's overlap with lawyers. I sometimes refer to public adjusters as like narrowly licensed attorneys. They're not attorneys, but there's some overlap. So a good lawyer who's experienced and does this, as opposed to a generalist that does everything, and a public adjuster, yeah, those are resources to go.
Awesome, thank you.
There's a question back there.
Please.
Hi, I actually have a question for each of you. Teresa, thank you for setting this up. Thank you. You said there's such a quick number of sales, real estate sales. Has it been of individuals or has it been of corporations and developers?
We have had all kinds
They're
of
buying or selling?
buying
Buyers,
lots.
yes.
Buyers.
So the question is, who's buying our Altadena lots? That's the basic question. All kinds of people. I've had buyers who are La Cañada families with a senior in high school, and it's a perfect downsize for them to buy a lot and build something wonderful that they're looking forward to living in once they're empty nesters. I've had calls from New York City, from guys, named Biff, who have $16 million in a fund, young guys, new investment bankers who want to understand how they can buy 50 lots right now. I definitely tell them they won't be popular, but it's, a lot of those developers have interesting ideas about rebuilding quickly. And, some of them have plans to get homes up by the end of this year. And, depending on who you are, that's great or it's not great. I think what's really interesting to think about, and that's why I brought the 8-ball, because no one knows, is a lot, the question I get most about lots is who is buying our land? And there are groups of Altadenas who have gotten together. And I've gotten phone calls from them saying, someone from out of the area is going to buy that lot, call us. We want an opportunity to bid. But the question is from people who need to sell. And there are a lot of people who just don't have adequate coverage, or they're, older than 75 and don't want to go through the rebuild process, or they have young children and they're not interested in that long haul while their kids are babies at home. So the question I get is, do I sell my lot today? Will I get more value today to walk away, or will I get more value later? When, and that's I have no idea, I mean, it's interesting to think about. Now there are very few lots on the market. I mean, after the scrapes are finished, we could have 800 lots on all at the same time. And
It's set to sell now.
But it's fascinating because Wall Street says that later the lots will be worth more. I've read that in several places. That seems really counterintuitive to me. If there are 800 of them, it seems like the prices will go down. So, in my mind, your lot might be worth more when you have less competition. But, the 8-ball says it cannot be determined. So anyway, that's my spiel on that.
It's a wide variety right now. I'm sorry.
Raffi.
Raffi, what do you attribute the quick resolution of the Lahaina?
So the question is, why did Lahaina's lawsuit settle in 11 months when these things take years? There was a number of factors. Now, remember, in the Lahaina lawsuit, we sued a number of defendants, including the utility company, the state, the county, and a couple of the landowners that were not maintaining the properties. And so the primary driving force, one of them, was the threat of bankruptcy. The utility company, which is not as flush as Southern California Edison, filed bankruptcy. Good luck getting paid. It's going to take many years, and you're going to probably get pennies on the dollars. And that was a real threat, and that was a driving force. Number two, time is money. People want to rebuild as soon as possible, just like you all want to rebuild as soon as possible. So as plaintiffs' attorneys, we figured, look, the sooner we can settle at a reasonable amount, the better it will be for the community. Is $4 billion enough? No, it's not enough. But time is money, and it's a decent outcome given the population there was about 13,000 people. So it was a decent outcome for what it was. And there was some political pressure as well, of course, because we sued the state, the county as well. So there was multiple different factors that led to a quick resolution.
The adjuster, I'm talking to a lot of contractors. Some of them are saying, oh, you don't have nearly enough insurance, so it's going to cost this amount. I don't know if they're inflating their costs or not. No. How can an adjuster get me more than my maximum coverage?
Well, it's not always possible. It's not always possible to increase above policy limits. That's more of a Raffi situation, frankly. But a lot of people are not aware of what coverages are in their policy. Even for people in the industry, these are documents that are not easily understood. They're not intuitive. And there's lots of additional coverages. There's lots of as incurred coverages, we call them, that require you to do something to access a value. And there's a lot of, I think, room there for strategy or just thinking about your options. A good advocate will give you that time to talk to you and maybe send you on your way, because it doesn't make sense for you to hire a public adjuster. I don't want to say it's simple, but like an underinsured policyholder who's had a catastrophic loss like this, you know, to access their policy limits shouldn't be an ordeal, frankly. It should be fairly straightforward. In practice, it's not. But these additional coverages where you're looking for additional assistance when you have extended replacement costs, you get above policy limits. It all depends on the coverage you have in your specific circumstances. But you know, I'm going to be a broken record tonight. I'm sorry. The best thing to do is to go talk to someone, bring your documents with you, and they'll help you look at that. There is, for uninsured or underinsured losses, there's also FEMA relief. I understand my colleague actually reminded me that they've extended some of these deadlines for uninsured personal assistance, so you can look at those sorts of things. There's a fair amount of resources out there, and then you can, if you have exhausted your policy, you can talk to a lawyer about a third-party claim against the tortfeasor, Edison. So yeah, you have options. Definitely look at it. A public adjuster is not going to get you above your policy limits if you are in fact at your policy.
Thank you.
Sorry, and just as a reminder, we put an electronic sign-up sheet on Zoom. So for those in the Zoom community, please, we kindly ask sign up so we know who's participating, and thank you for the participation.
Yeah, I have a Zoom question. This person has gotten an insurance payout check and it's in Bank of America. But Bank of America is making them request the money as needed to build. And so they feel like Bank of America is basically giving them a lot of red tape and holding their money, and they want that money available to them. What should they do?
Daniel, I'm happy to, but
I mean, I'll start the conversation when that portion of somebody's insurance coverage, the rebuild dwelling coverage is written to the policyholder and the lien holder. And they go and open up an escrow account and put that portion of the insurance policy in an escrow account so that they are going to refund and reimburse as services are provided. And so, but that's just that one portion. Their contents, their loss of use should be given to them directly without the lien holder being on the check. But I'm going to let you kind of go into details on how the distribution and draws.
yeah, I believe that's accurate. The mortgage lender, the insurance company is required to put the lender on any check, so they come co-party. In order to cash those checks, you need to have your endorsement of the mortgage company. Depending on their internal policies, what you've got going on with the property, they may sign off or they may require you to put this money in escrow. And it makes sense. I mean, it is red tape. It is not fun, frankly, to go through, but it makes sense because if they've released all this money, a fair, whatever amount of people greater than zero will take the money and not restore the property. And that is the property that the mortgage has a security interest in. So it's a necessity. You know, we have a whole mortgage department that has 30 years of experience dealing with this and kind of cutting through the red tape. We are fairly successful in getting mortgage companies to make exceptions, give more money, or frankly not require monitoring. There's other ways that are 100% legitimate to get around that requirement, but it's case by case, and it depends who your lender is and what you got going on with your insurance claim, and you know what your plans for repair are.
Conversely, I just want to add, Brandon, correct me if I'm wrong, but because I've seen this happen at least once with one of my clients, but the bank can't just take the money and pay down the loan. That is money that you've contracted with your insurance company as proceeds to rebuild. So they can't just take the money and then try to pay down or pay off your mortgage, unless of course that's what you decided to do, you know. So that's something else to clarify.
Right. I'll absolutely defer. I'm not an expert on that.
Yeah.
I do know that some notes will have some sort of acceleration clause for something like this. Whether they can do it or not, in my experience, they shouldn't be doing it. And just from experience of the outcome, I think Raffi, what you're saying is 100%.
Before you move on, just because I talked to a lawyer, because I got a letter back when I asked for forbearance, and it was
they wrote it as if I already agreed, and it was basically, okay, you cannot pay your mortgage for the next 3 months, but then at the end of that 3-month term, you owe that 3 months worth, and oh, by the way, during that time, we will report you to the credit bureaus that you're delinquent, and oh, by the way, if you make a partial payment, we will put that in an account, and if it earns interest, you aren't entitled to the interest. So I shared it with a lawyer who I guess used to represent mortgage companies, and yeah, he was like, yeah, I had said, I'm gonna call and say, absolutely, I don't agree with this. But then he also pointed out that possibly because they're out of state, they don't know this, but in California, if the mortgage company puts the money in the escrow account and divvies it out for the rebuilds, it is required to be at least 2% interest for the rebuilds. The bank doesn't get, the mortgage, the lender doesn't get it. That 2% is supposed to stay in the escrow account, grow it so that we can use it for our rebuild.
Yeah, really quick, I'll touch on that. I think early on, like right after the fires, I would say probably for the first 2 weeks, servicers weren't under the pressure to do the right thing. And I think we called probably within the first 2 weeks, you were told, we'll give you 3 months, but in 3 months you owe the whole thing. That doesn't do anything for anyone. And then probably around week 2 to now, the servicing companies are giving, actually, we just had one of our, great, right? You got 12 months, full forbearance, doesn't owe anything after the 12 months. It's a full 12-month pause on his payments, no balloon payment. And I mean, he was in tears after he got that call. So
On the credit.
no ding on the credit. You know, his score is going to stay the same. They, you know, by law, servicer has to. By law, the servicer does have to report that there is either some sort of forbearance plan, some repayment plan. You're technically not paying as agreed to as on the note, but the score will not be impacted. The score stays the same. So that's why there's some confusion. I was told that my credit is not going to be affected. That's true. Your score is not going to be affected, but there will be a note that's placed on that trade line on your credit report that says if this trade line is not being paid as agreed, or it's in some sort of payment plan, deferral, forbearance. I mean, I've seen all kinds of words being used, and that's where you want to be a little careful. Yeah.
No, I was just gonna say, because once that note is there, in my experience in COVID, no car loan, no refinancing. It, you know, it doesn't impact the number, but it impacts your freedom.
What if instead of it being considered forbearance, because we spoke to somebody who focuses more on commercial loans, and he said his firm was doing loan modifications. So if I ask for a loan modification where it's whatever period of time, 6 months, 12 months, that it gets tacked on at the end, then if it's been a modification, does it still get that little flag or no?
Yeah,
Just kind of repeat a little bit back.
so sure. The question is about forbearance versus modification, but it's viewed the same way.
It is. Okay.
Yeah, a modification and a forbearance is at the end of the day paying in a different way than you originally signed up for. And so right now the rules are that you have to be out of forbearance or out of your modification for at least 12 months before you can borrow on a new conventional mortgage. I'm not too sure about commercial and SBA, but you know, if you have no plans of borrowing in the next 12 months, then great. But you have to be out of forbearance or out of your modification period for 12 months before you can borrow.
Thank you.
Yeah, having done modifications, it does affect you. But is there such thing as a deferral
A deferral.
on your payments?
Similar, right? Like defer. The question is deferral versus forbearance. Deferral is just you're deferring it and willing to pay that lump sum at the end of 90 days or 6 months or 12 months. You're deferring the payments. But again, it will have the impact on the credit trade line.
So even if they agree to defer it for 3 months and it goes to the end of the loan, it's still a ding?
your score will not be dinged, but the trade line will be noted that you have not made payments and you're in some sort of deferment or deferral.
Let me just comment on something. So for 9 years, I defended financial institutions on these types of cases. There's a couple of things you guys need to know, and this was a mess during COVID because people didn't understand the difference between a forbearance and a deferment, and they just thought forbearance means forgiveness. It does not. Every lender has an investor behind them, and there are investor guidelines which dictate how the loan will be modified, what the forbearance plan means, what the repayment plan means. So you have a responsibility as a borrower. You need to ask these questions. You can't assume that across the board every lender operates the same way, because they don't. Yes, there are certain laws in place by the state of California and federal regulations, but also the investor has its own guidelines in terms of how they are reporting certain things and what types of product, loan mods, forbearance, repayment plans they're offering to their borrowers. So you need to ask and be very sure what it means. I personally, I think it was during COVID, I can't remember who the mortgage servicer was, but I had gone a 3-month forbearance, and I made sure in writing that they would not report it on my credit report. And I got a confirmation in writing, but sure enough, they reported me as late and past due, impacted my credit, and I went after them, and I had them modify my trade line. Because it was there was a violation of what's called the Fair Credit Reporting Act and the California Credit Reporting Act as well. So you have to be very careful. Okay, so
Also not making payments does have the potential to affect the escrow process for insurance. And again, that's an insurance question. Your finances are a much broader thing to look at. But if you are behind, or if you're in arrears, and if you haven't done the formal process of communicating with your mortgage company, getting the money out of escrow becomes much more difficult.
Adam,
I have another insurance question about accessing funds, ALE funds for replacement housing. So typically the insurance company will come up with some sort of comparable fair rental value and base what you're entitled to on that. My question is it uniform in all the policy language that it's always on an as incurred, sort of as demonstrated basis, or can you rather say to them, look, we are entitled under any circumstances to the FRV, and we don't have to even talk to you about what we're actually.
It's an excellent question.
can you guys not use acronyms? Because I think everyone
Yeah,
doesn't know what they
sure.
mean. So
He's
ALE,
talking about-
FR. Yeah.
It's talking about the loss of use portion of the claim. It has to do with allowing you to relocate while your house is uninhabitable. And I'm sorry, I'll try and speak up. Keep reminding me. So there's different subsets of loss of use, including loss of rent if it's a rental property, additional living expenses, which I don't want to get too far down the rabbit hole, but most policies are based on a form called ISO, Insurance Services Organization. And so when I'm talking generally about insurance companies, most of them kind of sort of do have the same language. Most of them have additional living expenses, which is an as incurred expense, meaning that the insurance company, unlike the dwelling, doesn't have an obligation to pay you up front. They can force you to go pay the money somewhere else and then ask for reimbursement. But funny enough, there are policies that have something called fair rental value. And when I'm talking about fair rental value, again, I find myself wandering into these branches where I've got to talk about some, I don't want to go too deep, but fair rental value could refer to loss of rents, or it could refer to just kind of a theoretical adjustment of that, of what your displacement should be. And there are some policies that just say fair rental value, no as incurred language. And just the landscape in California being what it is, and common law contracts, whatever that policy says, you're going to get the benefit of that language. If it doesn't say as incurred, then they can't rightfully enforce it against you. So yeah, I look at the policy, make sure that it is in fact an as incurred coverage. If it is, then they can insist on you incurring and then reimbursing you. If it says fair rental value for the portion of property that you occupy, not that you rent out to someone else, then you're entitled to a theoretical fair rental value, whether you incur it or not. And of course, in a situation where you're potentially underinsured, those are powerful things to be able to know about and to use. Also, if you have a loss of use claim related to a state of emergency, remember that law and review worksheet I told you guys about. Download it off the DOI's website, the 2025 law and review. One of the entries there is about that the fact that you can ask for, I think it's 4 months upfront. Okay, so I'm glad to hear that most of you have heard of that. That doesn't have, as far as I know, any sort of trigger for an as incurred showing. That said, if you were to take this money and spend it somewhere else, you're not gonna be able to come back for more unless you show that you've actually incurred. So there is a double edge there, but you're entitled to those 4 months upfront. My understanding is without any showing of having incurred expenses. So if they haven't done that, make sure that they do.
I had a question that's related to this. Someone asked me this yesterday, which is if I had a 4-bedroom house, but the rental I've been able to find is a 2-bedroom house, and the rent caps for a 2-bedroom house are so much lower than a 4, what happens to the money in between that they feel they're entitled to from their insurance company?
Yeah, if it's as incurred, it's lost. But I mean, it's kind of like looking at a big sliding tile game. That there's potentially a benefit to taking less than you're entitled to, because that on a policy that has a dollar value limitation for your loss of use, that gives you longevity. So you might live in a mansion that you will run through your monetary limits very quickly. You might not want to do that. You might want to be more modest and have some long-term stability. Again, there's some laws that apply to this state of emergency losses specifically that already provide some extra benefits for loss of use that extends that out. I've seen arguments that because of a law that says the insurance company shall not limit your recovery, that in fact there is no monetary limit. I'd be wary of that sort of thing. But to answer your question, if it's as incurred, then yeah, I mean, you have to show your expenses to be reimbursed. And it's if you don't use it, you kind of lose it, unfortunately. But again, it gives you options.
Yes,
This is a lot on that topic too. My ALE cap, for example, if somebody told me, use what your home would have rented for in that kind of your budget, I was like, I don't even know how to figure out where you can go.
Yeah.
But my home would have rented for quite a bit more.
Yeah.
Because I have a cap that's 84,000.
Mhm.
And to me, that seems reasonable if it was only gonna be a year and a half. But I keep hearing it might take 5 years before I'm in my rebuilt home.
Well, I sure hope not 5 years.
So what is there, what you were just talking about, I thought I heard you say about like extra things when it's been a state of emergency or when it's by no fault of our own. It's not like we're dragging our.
Yeah.
We don't want to get our.
Again, a great,
What is there for us to do then?
right. Again, a great rule of thumb is to look at that law and review worksheet. It will tell you about how that your normal insurance policy that might give you 12 months chronologically is extended to 24 months and then up to 36 months for good cause. You can look at I'm oversimplifying that, but you can look at it, but that's a chronological limit. That's not a monetary limit. It sounds to me like your issue is a monetary limit. Again, you've got other avenues if your policy is going to be maxed out. Like I said, there's an argument to be made that they can't limit you monetarily. But I wouldn't count on that. What I would do is take your policy to a public adjuster or a lawyer and look at it. And if you are going to be underinsured, start planning on what you're going to do long term. Because yeah, $84,000 unfortunately sounds like you're going to wind up against that right away. So I'd want to look at the policy and see maybe there's some additional coverages. And frankly, I'd want to maybe do a more complete job of looking at the laws out there and make sure that there isn't something out there. And then again, there's this aid that's been made available, FEMA, SBA, there are resources out there to help. And there are attorneys that, that's an avenue as well for your uninsured losses.
I got a question yesterday from someone that would be for Raffi. A friend asked, are there, if your home is a total loss and the value of the home was $1 million, in the lawsuit, is there an expectation of what your claim might be for that total loss? And how does that adjust based on your insurance? Does that question make sense?
So just to be clear, the home is a total burn down. The fair market value is $1 million in your hypothetical.
In my
And
hypothetical,
what is their policy limit?
800.
Okay, so there's a 200 delta, right, that they're gonna be forced. Yeah, so we're gonna go after the $200,000 delta.
And $5 million of emotional stress.
So that's right, yeah. So, yeah, exactly. So it's gonna be, I mean, look, you can't double dip as part of the lawsuit. If the case settles or if there, the question's going to be, did you get money from your insurance? For what? How much? Did you get money from FEMA? Did you get money from the Red Cross? Right there, you can't double dip, right? They're gonna offset that against any sort of damages award. But I can tell you, majority of folks that live in the community in those pockets are underinsured. They're gonna have to be paying out of pocket to rebuild. So they're gonna have to get financing. They're gonna have to, the interest rates are not what they were, right? All those things, we're gonna go after that. We're gonna claim all that as part of your damages. And we're gonna try to, the goal is to try to make you as whole as possible, right? So.
Is there a deadline for applying for that?
The lawsuit, yeah, there's something called the statute of limitations. Depending on what the claim is, it could be different years, but I would say at a minimum, there's a 2-year SOL from when the fire occurred. So look, if someone's rushing you right now to sign to the lawsuit, I mean, that raises red flags for me. I don't like to pressure anyone, but I wouldn't sit on it. The claims have been filed, the case is moving, there were status conferences with the judge. You really, at least with my firm and many of the firms, you really don't have anything to lose in the sense that these cases are on contingency. So like, at least with my firm, if I were to come to you and say, God forbid, sorry, I got you 0 in the case, you don't pay anything out of pocket. So under no circumstances are you paying out of pocket. And if you get a recovery, then of course the client keeps a percentage and the law firm keeps a percentage.
Is there any harm in joining the lawsuit?
Is there any harm? I mean, in what sense? People have different perspectives. Like, I don't get involved in lawsuits. It's like a principle thing, right? I don't know. That to me is a potential harm for that person's, but financially, I don't see a harm because at least with my firm, again, every firm is different. If you sign up, you're going to sign an attorney-client engagement agreement. With my firm, there is no scenario where the client's going to be forced to pay me out of pocket. God forbid if there is a zero recovery. So in that sense, I don't see one. And again, I want to also just disclaim that whatever is being said today, it's not advice. I'm giving general, observations, remarks. I cannot give you advice. I'm not their attorney. So anyway, yeah.
So most of the law firms we hear about seem to be targeting Edison for their litigations. Is anyone attempting to hold other entities accountable for letting dangerous conditions outside of the staffing fire, but not being able to put it out there?
Yeah, so the question is, are there other potential bad actors other than Edison? That's being explored at the moment. So I'm not in a position to divulge much information on that, but that's, the thing is, once you file the lawsuit, it's not too late. You can always, it's called doeing in. You can doe in other defendants once you discover through discovery if there's others that are liable. So that's being explored. It's certainly not foreclosed, but if that's something that's more strategy and, to be determined. Yeah.
Here, we would like some sort of verification on how much more we can rebuild. Some people are saying 10% gets assessed, or doesn't get assessed, and some people are saying 20%, but you only get 10% assessed. Is there any finite answer?
I went to a presentation by the county tax assessor. They have a really thorough pamphlet and it's very clear. I will get a copy of that and make sure that you and your group get that. And I mean, you know, there are a lot of caveats, but the pamphlet, and there might even be some here. We all went to the, did anyone pick up a pamphlet there, Lori, Caroline?
I gave it to somebody.
No, okay. I'll get you that pamphlet. And you know, there are some caveats, so I don't want to give a clear answer because it's not clear. Yes, please.
Teresa, a question for you, and thank you all for being here. We greatly appreciate it. You mentioned earlier you don't have a crystal ball to know for land whether it's better to sell now or later on down the road. We still have a structure. We're surrounded 3 of 4 sides with burn sites. There's only one structure next to us that's standing. Do you have a perspective on that you could share? Meaning there may be a lot of displaced Altadenans that are looking for something now that maybe that demand dips a year from now.
Yeah. But I have lots of, you know, thoughts and questions myself. You know, I do feel like standing structures are holding their value once they're cleaned and you have the, you know, free of toxin report. I think some people who are going to be rebuilding want to live near the job site.
Yeah.
And they want to be here. I feel like in my experience with clients, people who have children who are 4th grade through seniors in high school, they do not want to disrupt their children from their friends. They want to stay in Altadena or the surrounding area. You know, I think there's lots of conjecture that our fire hardened homes, once our commercial districts and our residential areas are rebuilt, will be worth a great deal more. None of us know what this community will look like, feel like, be like at the end. I think we all have a lot of hopes about what that will be. You know, I lost a building just across the street from the wonderful restaurant Bernie. You know, I felt like we had elevated and we were just, you know, on the edge of having these wonderful commercial districts. Of course, we have, you know, the commercial district in the west with Good Neighbor Bar and all those, you know, wonderful places to have coffee and great things. I don't know, but a lot of smart people think that homes here will be much more valuable at the end. And if we all spend the money that it's going to cost to rebuild, I hope for that, because we'll all have so much invested here. So
if I can add something to that, I think that in the interim, there's going to be the market's going to be reacting to supply and demand.
Yeah.
Right. And I think that's one thing to remember is that as supply increases, you know, prices could get diluted. As demand shrinks, then the value will increase. And so you'll see, and I love that she provided all of these very real-time statistics showing what inventory has done over the last 8 weeks. And you know, you can't fight economics. It's kind of the economic principle of supply and demand. And I think there could be fluctuations in values, both on the lot side and standing structure side, until we get to that, you know, new normal, 4, 5, 3, hopefully, you know, sooner than later. But from a value standpoint, I've been getting the question a lot too, like, well, what does financing look like, you know, for people that want to buy a home in Altadena? And it's been interesting. I was telling everybody that the new market really is not developed yet. We haven't developed the new post-fire market. And the escrows that we have closed, the transaction that we have closed in the last couple of weeks, and I'll call them a little bit of an anomaly because they're in this like little window of we don't have enough new data to really support a decline in values. And
We don't.
we don't have any data to support, higher values, and so we've been able to continue to lend. The transaction we closed with Sarah on Alberta, that's kind of a prime example. There were homes that were probably within 100 or 200 yards from that house that burned, and the appraisal came back, at the I think just a little bit even over the contract price. So,
I think, Daniel used the interesting word data. And, I can speak to data that condos in 91105, it is a seller's market after the fires, right? People want to be close. And so those condos are flying off the shelf. When I think about Altadena 5 years from now, and I think about how much inventory we might have, because many people who are going to rebuild will also have purchased something else and they'll be settled elsewhere. And how many signs will we have in the yard? And will that dilute prices? There's so many scenarios. Obviously I'm cheerleading for our values and, cheerleading for our community to be incredible when this is over. And I can't wait to see, but we're all sort of dreaming it into reality, and there's so many groups doing so many cool things. Lori Schlachter told me about a group who have a catalog of Jane's cottages.
Yeah.
Ready to rebuild the Janes. There's just so many people full of heart doing so much stuff.
Thank you.
That wasn't a very good answer.
No,
Apologize.
perspective.
Yes.
I have an insurance question on behalf of somebody else. We just got a report back yesterday, and there are areas of the house that tested high for lead. So now insurance set us up with their lead expert / remediation company. He will look at our house on Friday and tell us what he recommends. He would also be our remediation team. My biggest concern right now before talking to him is making sure that we're working with somebody who is on our side and not the side of the insurance, which I worry about whether it's the most thorough job. Is this in line with letting the insurance company do their best job and then?
Well, we have kind of an unofficial motto that, it's not our motto, trust but verify. And we want to give the insurance company the opportunity to do the right thing, but that doesn't mean that you don't protect yourself. In a situation like that, if she's not feeling 100% that she's comfortable, call someone, absolutely. If you have an environmental issue, I assume the family's not living there.
Correct.
Right, so personal safety is more important than anything we're talking about. But assuming that's the case, if they're not comfortable, they can politely take that inspection off calendar and call someone. You do have a duty to cooperate with your insurance company. You do have a duty to not unduly delay them. But, satisfying your concerns is in no way, shape, or form untoward. Absolutely. Find out and ask questions. Ask questions of them. Keep that claim journal. Absolutely. Those are good things to do. And if they're not, being completely unreasonable, they will understand it, and frankly, they'll applaud it. They're required to give you information. If you have these questions, it's a great idea to ask the insurance company, get them on record somehow, ask them in an email. But yeah, absolutely. If you need to slow down for a second, take a beat and call someone, absolutely. It's a great idea. And I will say really quickly, because it just dawned on me, you mentioned earlier about policy limits and about public adjusters. Generically or generally, yes, but I have seen many examples of through negotiation, getting above policy limits through many different ways. It's case by case and it depends on the circumstances. We've done that quite a bit, but the policy is what the policy is, and so you have a lot of resources.
Thank you.
Yes.
Quick question for you as well.
Sure.
So, have you ever seen that insurance companies would pay the loss of use money in a lump sum?
Sure.
They do?
Yeah.
So but only if it's not as incurred, but just.
No, like a lot of these claims, just speaking personally, right? It's a contract. They're entitled to abide by the contract. If it does say as incurred, they're entitled to insist upon that if they, subject to the laws that we've kind of referenced. That said, I mean, if you're underinsured and, you know, you gotta get in line to figure out how you're gonna figure this process out, ask the insurance company to pay it. What's the worst thing that they say? No. And frankly, just put it on the record that you're asking for it. You'd rather not have to have your stay at another place monitored by an insurance company, ask for it. If you are underinsured or if they just want to do the right thing for you, they'll consider it. And I have seen it paid. I've also seen it paid in situations where you have a fair rental value provision that they're really required to do, at least for the period of restoration, the amount of time that theoretically it will take to rebuild your property. But even when you don't have that, it doesn't hurt to ask them and see what they do.
Piggyback on that, because I don't believe mine says as incurred, so technically could I say that I need them to give me my max, because then I could at least have it in an account for any interest, so maybe it'll last longer. I mean, we already did the math of how many months can I make this last and be reasonable, so we really downside.
Yeah, I will give the caveat that most insurers have the as incurred language for obvious reasons, because, you know, like I said, a certain amount of people greater than zero will not do the work or will stay at home or will, you know, do something where they're not actually incurring the expense. And in that case, the insurance company is not paying. If the policy doesn't have that requirement, then they're required to pay it upfront, you know, in good faith. So yeah, look at your policy, call someone, talk to them and confirm that. If it is, you know, if it's true that there's no requirement for as incurred, yeah, you should ask for it, at least for the period of restoration, which in your case, if it's $84,000, then yeah, I'm uncomfortable, you know, making specific determinations, but that's about as comfortable as I feel. Yeah, $84,000 to rebuild a total loss, something going on here, like we're seeing.
That's just your loss of
That's
use.
our loss.
It's just your loss.
No. I know, but that's what I meant for loss of use. I mean, you'll go through that in the time that it's required to rebuild your home.
Right.
Yeah, sorry if that was unclear. Yeah, look at it, and if it's there, ask for it. And you know what? Even if it's not there, you can ask for it anything. But anyway, worst thing they say is no, we can't.
With regard to replacement value of a home that burned that was a rental. It was being rented the way into market and the owner had not raised the rent on the tenants for 4 years. She was charging $5,500 a month.
Yeah.
So it was a very true stuff. Can she replace with market value, or does it have to be the same amount that she's getting?
I mean, it really depends.
Can you repeat that?
Yeah, she's asking if a property is being rented at less than what we call market value. When you go to your insurance company, can you ask for the full market value, the difference? I mean, it's kind of a tough one. I mean, I'm assuming there's no exchange of services or anything like that. Not, you know, walking the dogs or mowing the lawn or something to make up for that difference.
The only thing was she left her baby grandchildren.
Yeah, I would call. Look, I mean, in my opinion, depending on the policy language, I think you're not out of bounds to ask for the true fair market value. I suspect, just putting it out there, but I suspect there is some sort of reason that it's being rented at below fair market value. But I mean, these are case specific stuff. I'd call someone and see what you can do. You definitely don't want to mislead the insurance company. You got to deal with the facts that you have. But you know, I've seen that get paid before.
Now, going back to foreseeing the future in terms of home value, in the process of rebuilding, I feel like we need to make so many decisions now that will, you know, just be fully appreciated 2, 3, 4, 5 years later. If we rebuilt, thinking of a floor plan, and maybe taking data from pre-fire, what is the dream layout?
I love this question.
Do we have like let's say 3 or 4 bedroom or maybe smaller made with an ADU instead? Like, or should it have
some characteristics of a home that will, improve the market value in the ideal direction.
So what characteristics of a home improve the market value? I love this question. It's my favorite question. If it's a 3 or 4 bedroom home, please have a powder room. Powder rooms add huge saleability. And they elevate what you have to sell. Please don't put your laundry in the garage. No woman wants to go to the garage to do her laundry. So an indoor laundry room, not in the kitchen, that is spacious with a place to fold clothes. It adds huge saleability. And when we talk about the difference between value and saleability, at least in this market, if I can get 10 offers, that creates a lot of value. And a home that gets 1 offer because nobody wants to do their laundry in the garage, just gets less money, even if its stats are the same. Same 3 bedroom, same 2 bath. I think it's really important to have an ensuite primary suite now, closet space also adds saleability. In terms of an ADU, I have an opinion that may not be that popular, but I think in the future, luxury is going to be privacy, right? We're getting a lot of housing density, more and more, we have SB9 where you can split a lot that had 1 home and put 4. And I'm always happy to answer questions about SB9. The ADU laws are liberal with a JADU as well as an ADU. If you're someone who needs a studio, if you work from home, I think an ADU is valuable. But I personally think the luxury of the future is a home with a private backyard. And, no one else is there. It's your private dwelling. I think privacy is a big deal. A 2-car garage is a wonderful thing to have, storage, but, as your, plentiful windows, outdoor space. There are some really interesting designs that I've seen with canted walls, so that as you're rebuilding like for like, it feels like it's got more volume. People are doing so many wonderful things. Is that a decent answer? And call me because it's my favorite topic.
What questions? Is there any
There.
more?
Not from Zoom lands. They rest.
Zoomland rest, we've got a
I
question.
have one that came in.
Okay.
Okay. Rebuild rules as far as only 10% over the original square foot to not incur higher taxes.
That is the assessor question. And we will get your friend, one of the tax assessors brochures. I think the interesting 10% question is the like for like rebuild question. And I think so many people have been turned off by like for like because they think they have to rebuild exactly what they had before, which is absolutely not true. What is true is that it has to have similar massing, a similar, not exact spot on the lot. But you can change your interior floor plan. You can change the exterior style. You can add windows, add French doors, add hardscape. So much you can do with like for like to stay on the fast track. And I think that's really important for people to know.
Teresa, can I just add a little bit?
Yes.
I'm Gail Nuñez. I've been in the design and construction industry for 23 years.
Hi, Gail. Welcome. I'd like to know
And
you.
attending all the American Institute of Architects seminars, and a lot of the reason the like for like was put in place is to expedite the building department. If you submit a set of plans, as Teresa said, with perimeter walls, pretty much the same layout, they're not triggering zoning, they're telling us we can get your plans through in 10 days.
Wow.
Which you submit plans every month to all the building departments, and it usually takes 5 to 6 months if you're not doing a lot of structural. So that was part of the reason that they were saying 10% or up to 200 square feet. So take just a little small 1,200 square feet house, you could add 120 square feet or up to 200 square feet. How you configure it on the interior is what you and your architect or designer and your structural engineer, you guys will work out together.
I also have heard of a hybrid, and that's such good information. You expressed it in such a more articulate way than I did. But I think I spoke to an architect who talked about like for like and said there's this hybrid model where maybe you're just adding a primary. And maybe that primary is 499 square feet. And you can get through the process because you've got this like for like 10-day stamp, then this very simple addition. And they should be able to do that very, very quickly and not put you in the 5-month queue. So that's something else to think about. And even adding 200 square feet to a 1,200 square foot home puts you in a different category. And that category is much more desirable, much more saleable. So, saleability is really something to think about. And here's your designer.
Answer questions afterwards.
Anybody else have any questions? We've got food, we've got drinks.
Do you have any more of these?
Um,
Panels in the future?
I'm sure we will have more panels in the future. I think it would be very, very interesting now that people are looking at design to have a like for like expert. And I know someone who's really interesting in that regard. I think it would be very interesting to have Lori's people who are rebuilding Jane's and have the Jane's catalog. I've got a great guy, Carl Gilbert, who's got an incredible portfolio of modular offerings that are so Altadena, so cool. So there's a lot to think about and look at.
Thank you.
Thank you.